of these dark areas on the chart where the market has obviously consolidated. This is on a 4-hour bar, so it's spent quite a bit of time here, here, here. You can see that? And what I'm looking for is basically a boundary. Now, most traders that I've ever talked to or seen, what they'll typically do is make a support line. And all they're going to do is put a line on the chart. And I really don't see the market operating that way. I see the market operating in areas or zones. So I'm looking at this zone here for support, and I'm looking for this zone here for resistance. Now let's go up here and get some real numbers on this. So up at the top, I'm looking for the market, that's pretty close, 1.9723 on the top is what I'm looking for. And then on the bottom here, that's about right, 1.9484. So those are going to be the top end of the range and the bottom end of the range. Now let's take a look at the two inside zones. On the top end, that's actually a little bit low. Let me scoot that up. There we go. 1.9680. And then down on the bottom, okay, there was the bottom end of the zone. Here's the top. 1.9549. So what this does is it gives me an area on the bottom where I'm looking for the market to catch support. And it gives me an area on the top that I'm looking to catch resistance. Now, the way I trade this, and let me go ahead and zoom in here. I'll go down to an hourly bar. What I do when the market gets into one of these zones, and the bottom zone is really from about there to there, what I like to do is wait for the market to show me that it is starting to turn around. For example, the market dropped into the zone here. So what I will look for as I expand this out, let me show you. What I looked for, and actually this was a trade that I sent out to my members, was this flag pattern here. So the market had come down into the support zone, popped out of it, and showed a flag pattern. Flags and pennants are very good consolidation patterns that are generally speaking a continuation. They're not always a continuation, so I look at these as a potential breakout area one way or the other. So I'll trade that to the upside. The key here is, I think when you start to plan ahead and you start to look for these different zones on the chart, it's not necessarily true that I'm trying to pinpoint a particular price and say, well, I'm going to buy as soon as price touches 94.60. What I am trying to do is develop an area where I can start to plan and look for the signs that the market is turning around. For example, if the market's going to turn around, you're going to see the market turning around on the hourly chart far before you're going to see it turn around on the 4-hour or even the daily. So you're going to be able to really zoom in on what's going on and grab a chunk of the market without getting into a position that's got a bunch of risk associated with it. Now, there were a ton of patterns that showed up this week. There were all sorts of flags and support and resistance breakouts. There was one very good breakout back here, another one that actually hit earlier this morning. Right over here. As I said, there were several flags. There was one last week as well. So there's just a lot of stuff going on this week. It was a very, very rich trading environment. Now, if you look at last week's weekly wrap and you combine those concepts with specific areas on the chart, and I really think if you follow this example, and you take still an intraday chart, but you have a longer bar, 240 minute, I think is perfect for this. You can really start to see how the market develops these zones over and over and over. And again, you want to take a far off view. You don't want to zoom in where you can see too much detail.